So welcome everyone to another show of the Keeping It Real Estate Show. Today we have a very special guest on with us, Stephen Woolworth. And Stephen has had 10 plus years of professional management experience and is currently a senior management consultant. Prior to his current consulting role, he was managing a $500 million plus project in the aerospace and defense industry with a team of 90 people. Stephen is very experienced in strategic planning, project management, operational improvement, and financial analysis. I personally have seen firsthand how he's used these skills to be extremely successful in the multifamily space. And we have partnered with Steve on 3 multifamily projects in Nashville, Tennessee, which I'm sure we're going to get into more detail on this podcast about. So, Steve, with that, welcome to the show.
Hey, thank you. Happy to be on. Thanks for having me.
You're welcome. So why don't we start off having you give us a little background on yourself, including a little bit about your past career and your current career, and then we can jump into real estate after that.
Yeah, no, of course. So, so my background kind of starts similar to how you and Dan actually started. So, when I was younger, I was looking to pursue snowboarding as a career. And I had this goal in my head and was very passionate about achieving this as my dream. I was snowboarding a ton, but, as I was still trying to pursue this as a career, I also still had to pay the bills. So I worked a couple different restaurant jobs, including delivering pizzas, which is funny because, you get these, I was living in Tahoe at the time, and you get a bunch of 40, 50, 60-year-old people vacationing, paying a 19-year-old kid to deliver pizzas in a 4-foot blizzard. So it's kind of funny looking back on how interesting that was. And so I also, at the same time, I also had taught myself some coding. On the computer, and in my downtime, I actually built web pages for people and also did some digital imaging touch up for wedding and event photos. At the same time I was doing all that, I was working on my degree. So maybe not as diligently as I should have been. But it was, probably my third focus in line in terms of snowboarding and paying the bills. But still ended up completing my degree. I got a degree in finance. And then, as I mentioned, determined to make snowboarding a career, but ultimately I did get some sponsors and did a little bit of traveling, but, due to a series of injuries and my body just basically telling me, hey, it's time to quit. I decided to, stop snowboarding and kind of transition into more of a career. And so, as one door closes, another door opens. And through my pursuit of my passion, I was able and blessed to meet a whole bunch of incredible people in the snowboard industry. And one of them was Dan Breezy. And so him and I actually ended up working at a kids camp together, a kids snowboard camp. And then we ended up working together a few years later at a company that I worked for, and he was a snowboarder for. It was a snowboard company. And it was a company that was owned by 2 amazing people. And I was lucky enough to be a part of this business and help them to scale this business and grow this business up. It was essentially in kind of a startup phase. I was able to travel overseas. And my role was overseeing manufacturing. So I was dealing with a lot of different factories in different parts of Asia. I was there for 6 years, and then I worked for a software startup for a short bit of time. And then I transitioned into actually aerospace and defense. It's kind of an unusual path to go into, but that's what I ended up doing, and ended up as the lead project manager on a new aircraft. Through that, I kind of found that I was really passionate about solving problems, and just like I was about snowboarding, I found this passion. And so, I was having a career discussion with a mentor of mine, and he said, if you like solving problems, you may love consulting. And that was kind of a turning point in my career. But before we move on, I just wanted to say something about mentors, and Mike, jump in, because I know that you're a big fan of mentors, but, mentors have been the difference maker in my life. And in terms of making career moves, I can't emphasize enough. I mean, I would say most older people probably know this, but if it is anyone younger listening, just like most great companies, they have a board of directors to help steer big decisions. Mentors are essentially like a board of directors for your life. And a lot of them have done what you were wanting to do and can help guide you through this unfamiliar territory and help you to, especially in real estate, to help navigate real estate and to prevent a lot of big mistakes. I know you had Steve Nabity on the podcast, and he's somebody who I highly respect. And I remember during his episode with you guys, he had a couple really good tidbits about board members, why they're so critical to your business. And I encourage everyone to listen to that episode. Anything you want to add to mentors?
Yeah,
Mike?
definitely. I mean, I think that's spot on. A mentor or mentors. I mean, it doesn't hurt to have multiple mentors, across your career or, even your personal life, but they allow you to avoid so many mistakes as you go down your career path, whether it's in real estate or, a consulting career like yours or a different type of career. But not only that, it allows you to fuel your success so much quicker. It allows you to scale quicker, to grow your business quicker, to, be able to work your way up in a business if you're in a corporate career. So I couldn't agree more with that. And I love that you mentioned that you had a passion for solving problems. I think, that's a very unique skill set and desire. And, in the multifamily space, you're always running into problems and issues. And I think that's regardless of what type of business you operate. And if you have a passion for that, or if you can find someone on your team that has a passion for solving problems, you're really going to have that much more success, because that's really where the money is made, is when you're solving people's problems.
I couldn't agree more. And honestly, I mean, going back to the mentors, same kind of what you said about solving people's problems. You can go out and try and solve this problem by yourself and go figure out how you want to get into the company you want to get into, or you want to go into, you need to solve this issue with real estate. But if you have a team of mentors or a group of mentors that you can go to for advice, they will essentially help you solve that problem for you. Problem solving it's very critical in any sort of business. And I think mentors help you not only challenge you and expand your thinking, but they're going to also save you a lot of pain along the way.
That's exactly right. And probably reduce your stress levels significantly as well.
Yeah.
Yeah. I mean, I think about
Yeah.
the first apartments that we purchased and the amount of stress that we went through over a 5-year period. And, if we had gotten that advice from people that were successful in the business, we could have alleviated a lot of stress, saved a lot of money, been more successful, and just had a lot more fun along the way doing it.
100%. And I was told early on that never be afraid to reach out to someone. If whether it's just you want them to be your mentor, or you want to have a conversation with them, or you just think it's an interesting person that you just would want to sit down and have coffee with, reach out to them. The worst that they're going to tell you is no. And then you'll be in the same boat as if you didn't ask them. So always take that leap of faith and reach out to somebody.
Yeah, that's exactly right. And I wanted to touch base too. I just started reading a book called Who Not How. Trying to think of the gentleman that wrote it. I'll put that in the show notes, but they just talk about, who do you need in your business or in your life, and not how are you going to get there? So who's going to help you along the way? And in this book, it's specifically referring to your business and who you need to employ, who you need to bring on the team. But not only does it apply to your business and when you're hiring people, but also when you're looking at a mentor or who else you can partner with that can really fuel your success. And it was Dan Sullivan that had wrote it, and another gentleman. But they also talk about, just a one pager. So if you have a who that you bring into your life and you have a project that you want them to complete or them to help you with, just detailing why that project is important, what's going to happen if you fail at that project, who's going to be accountable, what the timeline is. And you just kind of lay everything on the line, and then you monitor that as you go. So I think, really focusing on the who and not the how a lot is really going to allow you to have that much more success in your life.
Yeah, I'll definitely have to get that. I'll have to write that one down and put that on my list for one of the.
It's a good one. I'm in the first chapter, and it's just been incredible. So take a peek at it. Moving on, Steve, what were some of the top takeaways from your corporate positions in the snowboard industry? So when you were working with Celtech and you were working with Volcom, What type of knowledge did you take away from those careers, and have you been able to apply to your multifamily real estate career?
Yeah, so that's a good question. Both of those jobs. So with Volcom, I was doing sales, and then with Celtech, I was working in. I did some sales as well as some manufacturing. Obviously, some manufacturing. So a lot of relations with suppliers and factories. And my biggest takeaway was, most businesses are people businesses, and people want to work with people that they like and trust. And so taking that moving that forward into real estate, you're working with vendors, you're working with suppliers, management companies, brokers, you name it. There's different groups of people that you have to work with in real estate. You can't just do everything by email. You're going to have interaction. You're going to have on-site interaction. And so understanding that really the dynamic and how to communicate well to these people, because if you don't communicate well, things are just not going to get done, and you're going to end up spending a lot of money, and you're going to end up with a lot more headaches. So I would say that because it's a people business, and most businesses, in my opinion, are people businesses, whether you're making parts or chips or software or whatever it is, you are still communicating all the time with different teams, and things have to come together very, very seamlessly. And if they don't, that's when a lot of pain points happen, a lot of friction internally happens, and it all stems from communication. So my biggest takeaway is that communication is everything. If you can communicate well with all of your team members, the business should be running at least fairly smoothly, because people actually know what problems to be solving.
Yep. I couldn't agree more with that. Communication is key, and we see it all the time, where there's a break in communication or a gap in communication, or, you have different personalities and they have conflicts when they're communicating, and all of those are going to create issues in the business. So trying to keep your pulse on that. I think, Steve, you do a wonderful job at that, just keeping communication open with on-site managers and regionals and property management teams and contractors. There's so many different moving pieces. And if you can communicate effectively with them, and not only that, but build a really good relationship with them. So when you have something that's not going right, you communicate, that issue, and you resolve it in an effective manner. And you maybe don't come down on them, but you say, hey, here's the problem. How are we going to solve this together? That's something that you've really excelled at. So kudos to you for doing that.
Appreciate that.
Yeah, definitely. And I think, communication, there's different forms of it, especially nowadays. You have in person, over the phone, text message, email. And I think for a lot of people, it's easy to communicate in the wrong way, or maybe not the wrong way, but maybe just not the best way when you're doing it via text or email, because you don't have those nonverbal cues. And so that's where I think a lot of people can get into trouble, and they think that someone is maybe placing blame on them, or just coming down on them hard, and maybe they don't think they are. So just make sure you're very clear when you're communicating, via those avenues too.
That is an incredible point, and it actually brings something else up to mind. And not everyone's communication styles are the same. So understanding what your team members' preferred communication style is. If somebody doesn't do well with text messages, or somebody doesn't do well with emails, it's not going to help you to continue to just fire those at them multiple times, because that's your way of communicating. If somebody responds with calls and they pick up your phone call every single time, that's how you need to communicate with that person. So understanding your different team members' communication styles is also a critical element to effective communication.
Completely agree. That was a really good point. So how about your consulting role? So you're currently in a consulting role. You're working with a lot of incredible businesses, large businesses. You're helping them solve problems. What have you learned through that process? And have you taken any skills away from that, or knowledge that you've been able to implement in multifamily as well?
Yeah, I mean, I would say that, all businesses have issues, so nothing is ever going to be perfect. So that's probably number one. It doesn't matter how big the company is. It could be $50+ billion, or it could be a small startup. they're going to have communication issues. Sometimes actually the small startups have less communication issues because everybody's working on everything. It usually gets into more of an issue the bigger you get, because people tend to work more in silos, meaning that they're, their boss, whatever falls under their boss is what they work on. And they tend not to communicate about other parts of things that may actually influence what they're doing. And then when all that comes together at a higher level, a lot of times you see some issues. So I think effective communication, again, kind of going back to what I think is probably the most important piece in business, effective communication, is making sure that it's going across the thread, looking at it from an end-to-end perspective. If there's anyone that I can, any advice I can put out there that I've learned, it's essentially, even if it's not affecting your day-to-day business, if you think that you're gonna need to look at the other problem at some point down the line, at least just have a conversation with somebody on that team, just to see if that will impact you. With 80% certainty, there will be some impact at some point by just that one bit of communication, and you will find out if you need to pursue that more, or if you can just focus on the work within your own silo.
I love that. Yeah, just jumping on the problems right away, and communicating that, making it known, instead of saying, oh, it's a small problem, I don't think we'll have to deal with it, and then all of a sudden it snowballs into this massive problem. And you look back and say, gosh, we should have communicated that. We should have talked about that issue back when it was tiny, and we could have resolved it really easily. So I think that's great advice. I was going to ask you, what are some of the common failures that you see with businesses, but it sounds like communication is right up there at the top. Is that correct?
Yeah, I would say communication is probably the biggest one. And then one you kind of see a little bit, but I would say it's ownership and not demanding people to do things, but really trying to have people take ownership. One of the things that we really try to do with a lot of our properties and our on-site managers is let them own a lot of things, but then also be there to support them in every way. We never want them to fail, and if they fail, that's on us. It's not on them. But then at the end of the day, it gives them the ownership and the ability to make decisions and kind of right the ship if need be.
Yep. Yeah. And I think giving ownership to one specific person, for each task is key, if you can do that. So, let's say you need a certain project to get, to be completed by a certain date at an apartment complex. If you're on a weekly call and you give that to 3 people and you say, hey, let's get this done, and you don't, put that action item on one specific person, it's really easy for all 3 of those people to come back the next week and say, oh gosh, I didn't know I was accountable for that action. So I think that is key advice there. How about some of the top qualities that you see with successful businesses that you consult with? What are they doing differently that maybe some other companies aren't?
Yeah, it's a good question. I mean, I having the right people on the team is very critical. I know the book Good to Great always talks about that, but it is very incredible. It is very critical. Having people that all see the same vision. The vision is passed down from the top, and everybody is on board and with that vision and moving towards a single goal. When you have a bunch of people who are on board, but they have different goals that they want to achieve, because one goal has not been set at the top, you can see that the company really loses a lot of its momentum and a lot of its energy to kind of move the company forward, because people are going in all different directions. There starts to become conflict. So what is the root of that problem? Again, communication. It comes from the top and it goes down. What is the vision? Where are we going? And then, everyone underneath the main visionary is there to execute and help realize that vision with the company. So I hate keep going back to the same thing, but it's communication. Communication is just so critical in business.
Yep, certainly. And well, let's do this. Let's shift over to multifamily. Why don't you tell us, Steve, a little bit about when you first got involved in multifamily real estate, and then also, why multifamily versus another real estate asset class?
Yeah, it's a good question. So again, going back to mentors, I didn't know anything about real estate. I started making some money, and I knew that I could either put it in stocks. Crypto wasn't around that time. And so it was really stocks, the bank, or into real estate. And so my family is done single family stuff. And so I was, grew up with some real estate. So I was like, you know what? I'm going to do real estate. I don't really understand stocks that much. So, I mean, I understand it from a basic level, but I don't keep up with the markets as much in terms of stocks. So I was like, you know what? I want to go into real estate. So I started doing a little bit of research, and I knew Dan Breezy was obviously in real estate at the time. This is probably 7 years ago. And so Dan was not only somebody I looked up with because of his success in snowboarding, but he was doing, what I wanted to do. He was investing in real estate. And so I called him up one day and said, hey, I'm wanting to invest in some real estate, and I know you're doing it. Can I learn more about what you're doing? He said, well, what do you know about it? I said, I know absolutely nothing. And he said, okay, well, being the friend that Dan is, and kind of taking on a mentor role, he gave me 2 books to read and said, hey, read these things, give me a call when you finish. And so I went straight to work, read both the books. I actually went and took a weekend course. I forget what the course was, but it was just it was a local course. There was 20 people there. It was a huge sales pitch at the end, but kind of gave me an understanding of, whoa, is not just real estate. It's a lot of different things that you can do in real estate. Let's see here. It was within residential and single family homes. It was, hey, you can do long-term rentals, you can do short-term rentals, you could do Airbnbs, fix and flips, wholesaling. And then on the commercial side, it was, you could do industrial, retail, multifamily, storage, etc. So it was a little overwhelming, but then after doing some more research and talking with Dan again, it made sense why multifamily made sense to him, as well as why it made sense to me. So for me personally, it made sense because it was a lower risk asset class, versus something like fix and flips or Airbnbs that can actually make you a pretty significant return, but you also take on that risk with it. So everything's a risk and reward when it comes to investing. So, I liked multifamily because not only did it have a lower risk profile, but it also is a cash flowing asset class. So, and the other reason that I liked it was because multifamily over single family was when your single family unit is unoccupied, meaning no one lives in there, well, it's vacant and you are covering the entire mortgage. But with multifamily, you have significantly less risk because you spread that vacancy over a number of units. So, normally in multifamily, you don't have all your units vacant at one time unless you're doing a full massive renovation, but that's driven by you, not by the people that are your tenants. So multifamily is able to spread out the vacancy over multiple units, and so you're still able to cover your loan payment when you have to do it. So it was the risk profile that I was wanting, and it was the risk profile. It still has good returns. It cash flows, and it can weather an economic downturn. So those were the main reasons why I went into multifamily.
Love it. So lower risk asset class, cash flowing asset, which I agree with. Both of those, you spread risk amongst many units instead of, just 1, 2, 3, 4, and then ability to weather an economic downturn, which, we're in one of those right now. And so that's very, very important to get into asset classes that can weather the storm fairly well. Now, I know, Nashville is the market that you've been investing in. We've been partnering with you in that market. It's been fantastic. Why did you choose Nashville? And, what different markets did you look at when you were kind of getting into the multifamily real estate game?
Yeah. So I'll tell you a quick little 60-second story about how I really chose Nashville. So I've been going out to Nashville for years. Probably about 10 years prior to starting to invest there. And I really saw how the Nashville was changing. I had a whole bunch of friends out there. We'd go out there for big fun group trips and just go out there, just a couple of us. And so saw how Nashville had been changing over the last 10 years. I mean, it had been gentrifying like crazy in different areas. You always saw cranes in downtown. And so that really had my wheels turning. But what I did is I actually flew to Nashville one year and rented a car, and I started in Nashville. I drove the whole market, learned the market, met the brokers, met with property managers. And then I had actually mapped out a entire route through the Southeast that I wanted to drive. So, and meet with different people along the way, because I wanted to explore other markets. I wasn't fixated on Nashville at the time. I just wanted to start there. So I started in Nashville. I drove east, went out to Asheville, down to Charlotte, then from Charlotte to Augusta. And along the way, I met with brokers and property managers in every city that I stopped at. So I went to Augusta, then I went to Savannah, then I went to Atlanta. And then, so I was in Georgia at the time. And then I went over to Alabama, and I went to Birmingham. I went to Huntsville, and then I went up to Memphis. And then I went from Memphis back to Nashville. So I did a 1,700-mile road trip in about a week. And so I took a week off work, did that whole road trip, and that really got me familiar with the markets that I wanted to go into and the markets that I didn't want to go into. And this is all my own personal thoughts on this. So I chose markets that made the most sense for me, that certain criteria that I was looking for. So everyone's going to have their different criteria. So not saying that one market is better than the other, because you can find gold in any of those markets. It's just what makes sense for you. Like, what are you willing to put into that market? Are you willing to build out a team there? Do you have family there already? Do you have friends there already? So, I mean, some of that stuff is extremely critical, especially if you're investing out of state. So that's how I ended up choosing Nashville. I had driven all those markets. Nashville ended up being a place that I had a lot of knowledge about. I had friends that lived there. So that's what I ended up going with Nashville. Not only that, but Nashville's underlying job industry, growth, everything met the criteria that I wanted. So
I love that. And I think a lot of people will look at the reports and they see the job growth, they see the population growth, and they might hone in on a single market and just go after it. I love how you spent time in each of these markets personally. You physically went there, you spent time meeting the team members, you spent time driving the neighborhoods, driving the submarkets, and really got to know the areas. I mean, if anyone is jumping into real estate as a syndicator, or they're looking to buy their own deal, or even if you have time and you're passively investing, I mean, that is a phenomenal way to get to know, the markets and the submarkets. And yeah, you might not be able to get to know every submarket, but you'll get a good feel for the area. So I love that you did that, Steve. That's incredible.
Thank you. Yeah. And something else to touch on, you just mentioned, was passive investing versus active investing. One of the things I learned when I was first starting out, like I said, I didn't know anything about real estate. You can go from 0 to 100 really quick in real estate. Just takes a lot of knowledge and a lot of effort. But there was two paths that you can take into real estate. There's active investing and passive investing. And the difference between the two is active, you're the operator. You are the one who is not necessarily doing the day-to-day things, but you are actively involved in the operations of the business. And you can have a third-party property management company running the day-to-day, but you're ultimately the decision maker. You're the top person telling what the vision of the company is, or the business is. In passive investing, you are an investor in the business. You own a piece of the business, but you don't have any control of the day-to-day operation. So, you collect on the upside when you have a liquidity event. You get quarterly distributions, or even more often distributions. Just depends on how your business is set up, or the investment is set up. And they both have upsides. Active requires a lot of time and effort to be put in. So if someone doesn't have a whole lot of time, passive investing may be the avenue that you would want to take. because you just sit back and you collect checks and you can focus your time. I mean, everything's an opportunity cost. So maybe you want to spend more time with your family. Maybe you want to spend more time with your friends. And so, passive makes more sense for you. So, but I will say a good passive investor also keeps his finger on the pulse by checking the monthly financials that are sent to them at the end of every month. And they should be asking questions if you're not pleased with what you see.
Completely agree. I like that you mentioned, if you don't have time, so there's a lot of people out there that might own a business or have a corporate career. And, I can tell you, if you jump into the active role and you're buying your own deals, it doesn't take long before you're working, 30, 40 hours a week. For us, it was probably, 5 or 6 properties. And we were at that point where we were working that much and we had to start leveraging other people's time. So it piles on the workload rather quickly. Now there are, people out there that, they buy an asset and they check out and they let the management company do their own thing. And I can tell you from experience or from seeing other people do it, when that happens, a lot of times, more often than not, those properties start to slip and the performance is going to go down dramatically. So if you do jump into the active role, make sure that you're asset managing the property efficiently and that you have the time to do it. Another thing I think that's really important is, if you're going to jump into the active role, make sure that you have the knowledge to do it. So going back to Steve's comments on getting a mentor or, taking courses or partnering with someone that has the experience, I think that is crucial. Otherwise, you're going to make a lot more mistakes and you're not going to have the success that you should have had if you would have done it right. So,
yeah, 100% agree. Yep.
So Steve, what any advice for someone wanting to get into multifamily in today's market? It's a very interesting market right now, a lot of things going on. Any advice that you would give them right now?
Yeah. It's still possible to buy deals right now. It's tougher. It's, the debt markets are what they are. So just the big thing I would say is get your debt right. Make sure you do your due diligence, understand the debt. Again, that's going to probably come back. If you're new getting into it, I would definitely rely on a mentor or some sort of person that you can partner with who has done it, who has experience. Ask questions, listen to podcasts, read books, do your due diligence. Don't just jump into purchasing something, because if you get the wrong debt, in this type of an environment, it could set you up for the long run in a bad place.
Yep. Couldn't agree more. I mean, look at the length of the term, look at how much interest only you have, take a look at when your debt balloons. So when you're going to need to refinance or exit, what hurdles they have in the loan. So if they have certain metrics that you have to hit to be able to use the extensions or to be able to continue on with that company, there's so many different factors. So just make sure that you understand that very, very well. And I think something that everyone needs to pay close attention to these days, especially when we're entering, into a possible recession, is asset management. I mean, it's crucial to asset manage as well as you can and to do everything that you can to push the net operating income on your properties and to keep a great team in place. And Steve, I know you've been wonderful at asset managing in Nashville. Any tips that you can give the listeners on how to effectively asset manage multifamily properties?
Yeah, and you hit the nail on the head, Mike. It's less of a concern when things are just going phenomenal and market is just seeing, double digit market rent growth, because, you may not have to have your finger on the pulse. You should have your finger on the pulse, but you can also get by without your finger on the pulse. But where the successful properties are going to be is, as the markets turn, people who have their finger on the pulse at all times. That is really what is going to separate a good property from a poorly operated property. And so some of the things that you want to make sure you do, I would say, first and foremost, weekly calls with your property management company at the very, very, very least. You need to understand what the market rents are doing at all times. And that's not just your property, that's the comps around it. You want to, I would probably recommend more at least every other day calls with your management company to really understand what's going on in the property, because there are going to be decisions that are going to need to be made. quickly, whether it's new, any concessions that need to be given, or any changes in rent. It could even be raising the rent because you hit a certain occupancy level and you don't want to miss that window of being at 100% occupied, and being able to increase your rents and possibly get one or two more leases that are above market rent. So there's little things like that you can do. From a day-to-day business perspective, I would say walking the property with your property management and setting the expectation of what you expect right off the bat is critical. That is everything from walking the property and just saying, hey, look, there's a piece of trash there. There's a piece of trash there. This is not acceptable. I want to make sure that the property is clean of trash. That is, somebody walks on the property to rent a unit and they see a bunch of trash around, they're going to obviously have a lower expectation of your property and expect less rent. If it looks very clean and pristine, even if it's a B and C class property, they're going to be able to pay that extra little bump that you want to get. And that's critical when you're trying to hit certain NOI numbers. So net operating income numbers, your bottom line number that, you're trying to achieve. So those are just a couple little things from an asset management perspective. I would just say, make sure you don't have to dive into the minutia, but definitely set your expectations early with the management company as well as the on-site team.
Yep. I love that. Absolutely love it. And your comment about trash and just kind of setting the stage when you're out at the property with the management team, I think that's so crucial. I mean, you think about trash floating around the property and that you might not be able to get the rents, but not only that, you're probably going to attract a subpar tenant base. And so your delinquency is going to go up, your vacancy is going to go up. So all those little things, all those little details can have a massive impact on your property's performance as you continue to, go down the road. And I think you have to be flexible. Like you're saying, you might need to offer concessions or you might need to bump up rents. You just need to be able to take a step back and be flexible and try to solve the problem if there is a problem. So I love that. I know, Steve, you've also been really good at motivating the teams that you have on these properties and keeping the relationships great with them. Any tips on how to motivate, your team at the property level?
Yeah, I think setting expectations again early is probably the most critical part. It comes down to communication, because if they don't know what you want, they're not gonna achieve it. So understanding what your expectation is I would say the most critical part, so that they can work towards it. Even if they don't achieve it, at least they're working towards it. And then you can gauge any of your KPIs or key performance indicators based on that. So let's say someone's coming up for, it's been a year with this person, and you've set the expectations up front. You've been very clear with them. That they understand it, but they're just not meeting it. Well, then that's a conversation with your management company about, hey, our on-site, manager is just not on board with our business plan. They don't seem like they're working to execute it. What can we do here to motivate them? And have those conversations with your management company too, because they are in the people business. And don't be afraid to change management companies if your management company is not doing what you want them to. They should be there to support your business plan. And, you worked through this with them since the beginning. So the second you start looking at a property seriously and wanting to make an offer on it, you should be engaging your property management company. And the reason is because you guys are setting an expectation of what your rents are going to be, what the expenses are going to be from the beginning. So that way, when you take over the property, you don't have this wild expectation that they can't achieve. And you guys are so far apart that no management company is actually going to be able to achieve it. So working with the management companies early on is very critical. So that's what I would say. At least my advice would be. One other thing that I wanted to mention is, as you get into real estate, if you're new into real estate, there are some criteria that you want to make sure you communicate with brokers. So you want to make sure that you have a few different things already lined up, because if so for instance, you listen to a lot of podcasts and, everyone talks about a good deal, this and a good property, and this one's making money. But you need to set your broker's expectations about what you actually want. And so this is kind of going a little bit on a tangent, but I think this is very critical, because when I was getting into real estate really early on, I heard this through a podcast, and this was such a difference maker when I was talking to brokers. And so you need to walk into any broker office or on any broker phone call, you need to walk in with what kind of unit count you want. So meaning, how many units? Do you want 20 units? Do you want 50 units? Do you want 100? Do you want 300 units? You need to know what the age of the property is. So you need to know, is it 1960, 70s, 80s, 90s, 2000s? What year property are you looking for? And you need to know the type of area that you want to buy it in. Those are some very critical basic elements that you need to have already planned out prior to starting talking to any brokers, because otherwise the brokers won't take you seriously, because you walk in and say, hey, I want a good deal. And the brokers are just going to essentially say, okay, well, what is a good deal to you? And you're going to sit there saying, I really don't know.
Yep.
So
yeah, I think being very clear on what you want, because like you just said, they're going to ask those questions. And if you're not prepared with that information, they're not going to take you seriously. And, in this business, it's instrumental. It's extremely important to be able to do exactly what you say you're going to do. So if you're looking for that 100-unit property, these brokers want to know that you're going to come in there and you're going to purchase that without giving them a major headache or without backing out. And the more clear that you can be, the better picture that you're going to paint for them, that you're actually going to be a stand-up performer when you go to purchase that asset. So great advice there. I like how you mentioned working with management companies early on. Very, very crucial. Dan and I were actually just talking about that earlier today, just integrating the property management companies even earlier on. So typically we have, we're having conversations with them every other week or so when we put a deal under contract all the way until close, which is usually a 60 to 90-day period. We're actually going to go to at least a weekly call, if not more often than that, up until close. So that way, when we step into the property, you have a fantastic team that's on site. All of your CapEx bids are compiled and you're ready to pull the trigger. You understand the property, back and forth. So the more that you can be in front of that management company and have those conversations, the more success that you're going to have early on in your ownership period. So great advice there. Any other advice for multifamily operators out there, Steve, or passive investors too?
yeah, I would say let's start with passive investors. Passive investors, do your due diligence on the GP team. Don't just see what a return looks like on a project or pro forma for a property. Definitely, I mean, it's all about the operator. If you need to know what kind of business experience they have, what kind of experience they have on that team for running properties. And you should just have a good, solid personal relationship with that GP. And if you don't, at least establish one. Just really find out who they are, because you're giving them a lot of money, and they're going to be, not saying they're going to take it because they, it's going to be all legal documents and everything, but you want to make sure that property is being run as well as it could be, and it's not, the finger isn't being taken off the pulse. I've seen that before, and it's, I feel really bad for those passive investors. Not to scare anyone, because a good passive investor or a good sponsor will make you a lot of money. So
couldn't agree more. I think digging in as deep as you can. So ask for, investor referrals that you can call. Exactly. Ask about their track record, have them send that over to you. Have them send over their portfolio that, they currently have under management. Go drive their properties if you're in the current market. Go have an in-person meeting with the general partner, or a Zoom meeting, and just get to know them a little bit better. I think those are all very easy things that you can do to dig in a little bit further. So great advice there.
Yeah, 100%. And then on the GP team, anyone can get into this business. It's you just need to have the passion for it. I would say, it's a fun business. It's a people business. And, but yeah, there are some, direct steps that are, need to be taken along the way. It's not the least expensive business to get into. I'll say that, just legal fees alone up front, you could be spending just on your PSA, $40,000. So there's, you know, a little bit of, it takes some effort is what I'm saying to get into this business. But it is a fun business. It is a great business. And so, I definitely say, do your research, find a mentor, find somebody that, you know, has done it before, have conversations with them, have conversations with multiple people, learn as much as you can. You don't need to know everything before you get into this business. I certainly did not know everything. Dan and Mike have been incredible mentors to myself, you know, partnering with them on a couple deals, and they have been incredible mentors for me. I've learned a ton from them, and I'm blessed to have been a part of some deals with those guys.
I appreciate that, Steve, very much. And we've learned a ton from you as well, and your experience too. So appreciate that. And, you know, before we wrap this up, Steve, any book recommendations for our listeners or podcasts? And then also, you know, any big takeaways that you wanted to share from your real estate experience thus far?
Yeah, I'll start with the kind of the takeaways. You know,
yeah,
follow your passion. It doesn't necessarily, the passion, you know, this is more so for the younger listeners, but, you know, you follow your passion, but your passion doesn't necessarily have to be your career. I think that's where a lot of people get, and I did the same thing. I thought that going into snowboard company, and I loved working there. Don't get me wrong, but there are other avenues where you can follow your passion and also have a career. So you can work in somewhere, and you don't have to exactly, maybe you're passionate about the actual solving of the problems and not the actual business itself. But maybe you make enough money where it allows you to go do your passion a whole bunch during the year. So there are different avenues. That was the only thing that I really wanted to mention in terms of, you know, your passion doesn't have to be your career. And then in terms of books, I would say starting out with real estate books, the three main ones, obviously Rich Dad Poor Dad is an incredible book. It just kind of like helps you with mindset when getting into real estate. I think that's a critical one that everyone probably has read that's listened to this at least once, but, you know, read it every couple of years. The ABCs of Real Estate, it's another really good book. It's written by the Rich Dad Poor Dad. I don't know if it's a foundation or a group, whatever it is, but Ken McElroy was the author on that one. And the other one that I think was really kind of life-changing for me in terms of real estate was Tax-Free Wealth. It is a book all about taxes, but it's actually a very easy read, and it makes a lot of sense. It's not dry. And so that one, just changing your mindset about the way you look at taxes, because real estate has so many benefits for reducing your taxable income. So that was a eye-opening book. I read that twice in a row. So that was a great one. And then three business books that I have, Never Split the Difference. It's by Chris Voss. It's a how to negotiate basically and communicate effectively. He was an FBI negotiator, and it's all about the different lessons he's learned throughout his career. And he basically wrote the book on negotiating for the FBI. And that one I think is so critical because as I've mentioned multiple times in this podcast, communication is key. The McKinsey Way is by Ethan. I think it's Raskol, something like that. Basically, it's just all about structuring your thoughts and how to problem solve. So how to break problems down into simpler form. And that's always very key within real estate or any sort of business. So I really like that book. And then Delivering Happiness by Tony Hashish. He's the founder of Zappos.com that sold to Amazon for it's either $1 billion or $2 billion. I can't remember, but that's all about how to connect with your customers. And again, people business, you have tenants, they're people. It's all about creating an experience, creating some sort of a feeling for your customers. And when you do create that, your business will grow. And so I can't, you know, everything in real estate is a people business, whether you're dealing with your on-site team, your brokers, your vendors, tenants. It's just a good read in terms of just thinking about business from a customer's point of view. And then I just had two podcasts. Obviously this one, listen to a couple of the other episodes or a few of the other episodes. I really love Steve Nabity. Tim Gertz was a great one as well. So this podcast is amazing. I love listening to this one. And then the Old Capital podcast. it's focused on lending, but lending is such a key component into getting into multifamily that I think it's an incredible podcast as well.
Awesome. Well, thank you so much for those recommendations. I think I've read 4 out of those 6 books. I'm going to have to check out the last 2 that you recommended. Those sounded phenomenal. But yeah, Steve, we really appreciate you coming on the show today. A ton of great advice. I think our listeners are going to get an incredible amount of value. And before we jump off the podcast today, if our listeners want to get in contact with you, what's the best way for them to reach out to you, Steve?
Yeah, of course. You can send me an email at stevewoolworth@gmail.com. So yeah, shoot me an email. I'm happy to have a conversation with you guys. Like I said, a lot of people help me get into this business, kind of teach me the ropes. And so I'm happy to help share the wealth and share the knowledge. And so yeah, thanks so much, Mike, for having me on today. This was a lot of fun, and look forward to talking with you soon.
You're welcome. Well, thanks again for coming on. And I would highly recommend anyone out there to get in contact with Steve. You've been, a great asset manager, great friend, great colleague. Overall, just an awesome guy.
Awesome. Thanks, Mike. Thanks, everyone.